Welcome to another Coffee with Samso. We're here again at the UWA Club in Crawley, University of Western Australia. I've got West Cobar Metals Limited here today. ASX code is WC1. Met Szwedzicki.
Very good, Noel. Szwedzicki, yep.
Always a challenge. Market cap of 6 million. Number of shares 122 million, which is pretty good in these days. Yep. In fact, very good in these days. Share price is currently at 4.9 cents. So, right. Matt, welcome back. It's been a while.
Thanks, Noel. It has been a while. Yep.
Look, it's no big secret. The market has been punishing for everyone, including you guys. You're not the only one that's copying it. Yep. Give us an update of where you guys are, because I can see that you guys have done a lot in that 6 months-ish. Yes. So, yeah, if you could give us an update on WC1.
Yeah, perfect. Thanks, Noel. Yeah, it's been a little while since we've last spoken, but that's because we've been actually really busy technically progressing the project. We've done some really exciting stuff. The last time we spoke, I think we just had a resource upgrade on Newmont and O'Connor, and that was the start of some pretty exciting stuff for us. We've looked at the region more broadly. We've now got a bigger tenement package, so we've got a much bigger area to play in, and we've picked that tenement package specifically to allow for extensions of where we think Newmont is. And so we've put together an updated exploration target. That's probably the first key thing that we've done, and that number is really big. So on the rare earths, it's something like 1 billion tonnes in that range of 1200 ppm TREO, which is what we expect based on Newmont and O'Connor. So, a huge amount of tonnes, as much as you'd want, and then we've looked at what we've really got at Newmont is quite unique, and that's become more and more obvious to us over the last 6 to 12 months. It's different to a classic rare earth play because it's got other minerals associated with it, and high grade minerals, and this is because it overlies in amphibolite, so it's a different geology to a lot of other rare earth plays, and we've looked at the titanium in that in particular. We've got high-grade titanium dioxide through the clays. So we've been looking at, can this project work with a product based on titanium? And we're getting pretty excited about that as well. And that's a co-product of the rare earths. And we've got an exploration target on that as well. We think that's a very valuable product to have. And there's other things in the deposit. There's high-purity alumina. We've got a resource on that. High purity alumina is, it's one we haven't talked about much, but at the end of the day, we'll be producing a product that is very well suited for high purity alumina process as well. So, we've got exploration targets on the rare earths, the titanium, and the HPA, and we're pretty excited by all that. So then we kind of went, okay, how does this all flow together? Can we get a flow sheet that will produce a number of these products together? And the conceptual flow sheet that we've developed based on years and years of network historically to get to this point shows that we've got a really unique opportunity here to have co-products. So we believe through physical, simple screening, we can pull the titanium stream out and focus on creating a titanium-based product. And then we're left with rare earths, scandium, gallium, HPA, and various processes that we're working on to separate them and extract them. So for us, it's a very complementary flow sheet, and it's conceptual at this stage with a few steps to be validated, which is some of the work we've got ongoing now and upcoming. But it's based on everything we know to date. It makes sense, and it'll bolster project economics on a number of fronts. So building on that, we kind of went, okay, if we've got this flow sheet and titanium is a real potential product for us, what are we going to do with it? And titanium is a fascinating one. It's a critical mineral. The market dynamics are very good for titanium. Typically comes, you might have heard of mineral sands. It comes from mineral sand players with ilmenite, basically, and that's its most common form. So we kind of went, what kind of titanium do we have? There's a number of minerals that hold titanium. We did a mineralogy study, and the answer was that it's predominantly ilmenite and altered ilmenite, which are very good minerals to have. They have a high content of TiO2. And they're well known in the world of titanium. So we are looking at, probably the initial step would be to look at, can we create an ilmenite concentrate through a simple physical process that we can then sell. And ilmenite concentrates are selling from anywhere from $300 to $450 a tonne. And if we can create an ilmenite concentrate that's saleable through a simple magnetic and physical separation process, then that's a really good way to get the project going, a phase one of the project, while you've got a rare earth enriched stream that's left behind for you to work on for extracting the rare earth. So that's been the concept behind the titanium, and very encouraged by the initial results. The mineralogy was positive. There's a little bit of rutile in there, a little bit of zircon, which are all high value products, but predominantly ilmenite and altered ilmenite, which are really, really good bases. So based on all of that, it's given us confidence that the titanium stream has got value and it sits well in the product flow sheet. And then we sort of went, okay, we know about the rare earths, we've done a lot of work on that. What about this scandium that we've got? And what's unique about Newmont, again, in the area, and in fact, in Australia, there are very few higher grade scandium deposits, very few. You count them on one hand. And what we have seen through our sort of analysis of what's happening in scandium is a couple of things. One is that our grade compares very well across other known scandium deposits. Two, that our scandium sits in a semi-weathered profile, which means it's possibly easier to extract than some of the other scandium deposits in the world. And thirdly, the scandium market, it's a bit of an unknown to a lot of people. Scandium is a metal that people don't know too much about, and the reality is it's a small global market. It's currently very small, but the potential is astronomical, and happy to expand on that a little bit as we go, but we're quite excited by the scandium we've got. We're sitting high-grade scandium zones within Newmont, which we can extract along with the rare earths, and it's a metal that's got fantastic global potential, and it's got a really high price. It's exceptional high value. So again, putting scandium in the mix for us will bolster the economics significantly. So all those things have led us to where we are today with a project that's technically looking more solid than it ever has.
To me, as you're talking, it kind of making me, the messaging I'm getting is that it's becoming lesser of a rare earth project as opposed to a critical minerals project. Could you actually not deal with the rare earth and deal with the other commodities in your flow sheet?
So that's a really good question. We're definitely seeing it as more of a critical minerals project. It's got a suite, and we're evaluating, at the moment our base case is that we're producing the products together. They'll fall out of the flow sheet. But in the work that we do to refine that, it might well be that one or two of those products are stockpiled for a future use. A classic example of that is Iluka, who have been for years producing ilmenite and other heavy minerals from their mineral sands, stockpiling the monazite, the rare earths. And it's only now that they're building a rare earth refinery to process that, and they find themselves with a whole lot of good feedstock for that refinery. So, I think we have got a lot of optionality in our project to do a similar thing. If we come and do a study and it shows that in order, for example, to include the rare earths, the capex up front is too high, or the economics work better in a phased manner, that might well be the answer. Too early to say at this stage, but what we're seeing is the products have got good revenues associated with them, and then the studies will tell us whether there's a phasing element to them. And you might end up stockpiling, certain elements of it, yeah.
Is there enough volume for you guys for the other components? Take away the rare earths, you might have 1 billion tons of that or so, but do you have the volume for the others? Yeah,
absolutely. So at the moment, I think our titanium dioxide resource is about 30 million tons at roughly 5% TiO2. That's enough for a small operation, but we've got an exploration target that takes it out well past 100, possibly 150, and that's not even talking about the areas that if we drill and we're successful, they're going to open up other areas as well. So I think that's, for the titanium side, that's getting to a very reasonable scale. That's a large ilmenite project, many years of operation. So on the titanium side, yes. On the rare earths, again, we've got about 190 million tons currently, with a 1 billion ton exploration target. So that's more than we'll be able to produce in a multi-decade project. And on the scandium and the gallium, we haven't put a resource around that yet. It's something we're considering, but we know it's pervasive throughout that amphibolite enriched area over Newmont's, and we know the size of that, so we expect that there'll be very significant tons of that as well. So on all those, on all those things, because of the size of Newmont, at the moment we've got a 5K strike, with quite a wide amphibolite unit underlying it, and sort of thicknesses, between 10 and 20 metres above that of mineralisation, or 10 and 30 metres. They're big tonnages, and we expect that as we drill further south, this will extend as well. So the scale is there in all of those things, and that's what gives us that option.
Okay. In terms from an investor's point of view, what should they be looking for to give them that trigger to go into a company like, take a position in a company like yours?
We feel like we've got a project of fantastic value, and I guess we've put in a number of steps and plans in order to get that value appreciated by the market. And so I guess, fundamentally, we think there are, the amount of milestones we are coming up are really, really key for us. And we've just started to look at the scandium. Now the scandium is a huge potential for us. It's a massive value driver. So, there's a couple of things that, again, I'm happy to elaborate that will drive the scandium market, and there aren't many companies with scandium exposure on the ASX. So, I think with us putting out some news, and we've got some stuff that we're working on the scandium front, if we start to become known as more of a scandium player, I think that's got real potential for value re-rate, and it's a catalyst for value. I think, we've got a number of studies underway that put that flow sheet together and give it, the sort of rigor that it needs. I think they're value catalysts. We've got parties that we're talking to that have some interest in some of these minerals. I mean, any of those are potential catalysts. And I guess one of the things in our control at the moment is we've got a drilling campaign coming up in May. Starting in May and continuing through June. We're going to be drilling extensions of Newmont, and we're going to be looking for high-grade scandium, high-grade titanium, high-grade rare earths. So we expect that this will add significant scale to the overall project proposition. So we've got I feel like we've got a large amount of news flow coming up. We've got a very tightly held register, not many shares traded. So, I'm hoping that with a bit of good news, the share price can rapidly re-rate to a more reasonable level, to a level that's comparable to some of the ASX players out there.
As I said, we talked about the differences and what having a different basement meant, and I guess, looking back, you've got all these multi-commodities that could make a difference. But scandium's a very funny metal because a lot of people actually don't understand scandium or know about scandium, a bit like gallium, and gallium prices continue to rise because of the restrictions from coming out of China. Can you just give us a 101 on scandium and its uses?
Yeah. Scandium's a fascinating metal. So we've been reviewing technical papers and literature from the known scandium deposits in the world and all the test work that's been done, and we're very excited about it. Basically, scandium, what we believe, is on the cusp of a major growth cycle. It's a metal that ordinarily you might have come across it as an aluminium alloy in a golf club, for example. High-end golf clubs have a little bit of scandium in them, and that improves their qualities. The scandium market is very small at the moment, and it's small not because the demand's not there, quite the opposite. The demand is there, but the supply is not there. So at the moment, you've got a world where there's no one producing primary scandium. Scandium is produced in a couple of places in the world from a byproduct of other minerals. And that is a function of the grades of the scandium and the ease of extraction of the scandium and the metallurgy. It's always been a bit of a challenge, and so the market has never really expanded to the potential it could because the supply hasn't been there. So stepping back, why is scandium exciting? You might have heard a lot of talk about niobium in the last couple of years. On the ASX, some of the most successful players have been niobium-based players. Niobium does to steel what scandium does to aluminium, is a simple way of looking at it. So niobium is used in steel alloys and gives them all kinds of improved characteristics. Scandium does the same thing for aluminium alloys. So if you sprinkle a bit of scandium in your aluminium, you get better strength, you get reduced weight, you get better corrosion resistivity, better thermal resistivity, and importantly, its weldability improves. So, you know, I'll give you an example. Aluminium is typically riveted together like planes. If you start to add scandium into the aluminium alloys, you can weld aluminium together successfully. So all of a sudden you're getting just, it's like a bit of magic powder for the aluminium. It improves, you know, almost every quality you want out of the alloy. And the reason it's only used in a tiny proportion of aluminium alloys is because the supply is not there. So what that means is you've got a price. You know, it's actually quite hard to figure out what the price is. It's an opaque market because there's so few tons that are traded on a global basis at the moment. But the prices that are out there in the public domain are close to $1 million per ton US for a scandium oxide. If you were to reduce that to a scandium metal, remove the oxide, you're talking anywhere from 5 to 20 million US per ton. So you're talking about a product that's extremely high value. You know, this is one of the highest value metals there is, and the potential in aluminium alloys is phenomenal. If you know, you can imagine that even if it goes to 1% of global aluminium use, the market is many multiples of where it is now. So that kind of excites us, and we think, wow, the potential for aluminium is huge in the sector. And you know, people that have followed scandium for years will know that those properties are sensational, but it hasn't kind of delivered on the promise of supply yet. No one's really been chasing the supply that hard. We believe that's just turned recently with Rio Tinto about 12 months ago purchasing a scandium deposit in New South Wales, the Owendale deposit. It wasn't a particularly large purchase for Rio Tinto, and it's not going to be a particularly large mine, but what we believe is the value that Rio will get out of it is through their aluminium division. And you know, to me, it shows that it's such a strategic commodity that you've got these majors securing supply, basically, on a scale that maybe they're not too comfortable doing because it's small for them, but it's securing supply for a metal that's got massive potential within their aluminium sector. So, you know, that to me is an inflection point in the market. It shows that there is genuine intent on increasing the availability of scandium for these aluminium players, and this is just the start of it. You know, I think, you know, I hear about the Department of Defense in the US, you know, actively securing or looking for supply of critical minerals, and scandium is right near the top of the list because scandium is used in Russian jet fighters at the moment. You know, because the Russians have been producing scandium as a byproduct. That's one of the places that does produce scandium. So, you know, the US Department of Defense clearly sees the benefit of the scandium and wants to invest in that as well. So, you know, I think things are changing for scandium. The other important use at the moment is the solid oxide fuel cell. So this is in line with the green transition, the energy transition. You have fuel cells that convert either hydrocarbons or hydrogen into electricity. If you add scandium into the fuel cell, you get much better efficiencies and thermal qualities, and this makes it much more efficient. So again, this is a really rapidly growing sector and use for the scandium. And you know, just recently we came across a report from NASA where they're using solid oxide fuel cells with scandium enriched fuel cells to fly rockets to the moon. So it's one of those things that it's a bit of a metal not many people hear about because the supply is small, but it's on the cusp of becoming something major, we believe. And then you sort of come back to, you know, where are these mines going to spring up from? Where's the scandium supply going to come from? There are not that many places that have economic levels of scandium grade. It's typically measured in ppm, and it's typically reasonably low. At Newmont, we're quite unique. Our grades are, you know, we've got widespread mineralisation over 100 ppm, you know, good intercepts at 200, some reaching 300, 400 ppm. They're numbers that are very high in the scandium world. And the next question follow on from that is, how do you leach that, and then how do you extract it? Through very preliminary testing that was done historically, we've shown that Newmont has a semi-weathered scandium profile, and what that means is it leaches very well. It leaches easier than what we believe some of the New South Wales deposits leach at. So typically the scandium that's been looked at in the past from New South Wales requires a high pressure, high temperature acid leach with an extraction process on the back end. We don't need pressure. Our initial testing shows that we're not likely to need pressure to leach. You do need acid, but you don't need pressure, and the temperature you need isn't overly high. You know, we got really good results at 90, 95 degrees. Some of the others, you know, are in the hundreds, you know, multiples of hundreds. So we're what we're enthusiastic about is we feel like we've got a grade that compares with some of the better deposits around the world, and New South Wales is one of the better places in the world. And we've got you know, the potential that the leaching and extraction path will be simpler than a lot of the existing laterites that are out there. We're not in laterites, so you know. So I guess putting all of that together and really trying to figure out, is the market there? Is it going to be there? You know, with this milestone of Rio coming in and really showing that they're chasing this scandium market, I think things are changing, and I think we're on the cusp of something very.
So when you say high grade, 200, 300 ppm, 100 ppm, for most guys out there, me inclusive, is that high grade? Like, what's normal grade?
So if you look at some of the rare earth companies throughout WA, for example, that quote scandium content, typically it's 20 to 30 ppm is a number that people have. Yeah, so that's reasonably common. To get to 100 is very rare, and again that's come from the amphibolite and Newmont, and we find, by the way, our grade is very controlled by the amphibolite. So above it is high grade, to the sides is not. So you know, we've got 100 consistently through it. With 2 to 3 to 400, they're very rare grades. You know, some of the best New South Wales grades are in that range. You know, so
in the 300-400 or in the hundreds?
Across the range. There's companies that are drilling for scandium now. I think they're getting in the hundreds. Recently, you know, there's I think the deposit that Rio bought is 300 to 400, that sort of range. Associated with that is how you extract it. So the easier you extract it. And also, you know, there's a beneficiation path, which we haven't really looked at. It's part of our future work, but we believe, again, through a physical process, removing the titanium, you know, and just screening it on size, you're going to get a big uplift in grade even before it leaches. So that's what we're sort of looking at.
Okay. I mean, we spoke about your upcoming news flow and everything else. Is there, maybe just give us a quick rundown. You got the drilling happening in May. I guess for most people that's kind of the next point to look at. Any other big news coming out for you guys?
Yeah, we've got we've had quite a stream of work in the background in terms of the flow sheet. So there's aspects of the titanium testing and sort of you know, putting it into context of what we've got. So we're finishing a study on that. We're hoping to put out some results in the near term on that. We've been doing more and more work on the scandium and really interrogating where does it sit in the profile within Newmont, what does it look like, what's the potential there. So we're hoping to have some news out on the scandium as well in the near term. And I think, you know, that overall concept of the flow sheet, you know, it's becoming more and more defined, and the process of what we're testing is much more rigorous. So we'll probably have some news flow on that. And then the drilling coming up in May. You know, what we're hoping is that it extends the high-grade scandium, the high-grade titanium, the high-grade rare earths, and we're quite excited by what the potential will be. It'll be a massive system if it all comes in as planned, and that, you know, that's sort of the next, you know, 1 to 2 months of news flow. So we feel like there's quite a lot there, and I guess, you know, particularly with the recent focus on scandium, I think there's real potential for upside surprises on that one. You know, it's a very interesting metal. A lot of people, since we've put that announcement out, a lot of people have come to us asking questions about it. So yeah, we're excited.
Yeah, it's good. It's good to see. You know, I always felt that there was something different. I didn't put finger in it. I didn't know what it was, but everyone's kind of coming off granites, and you're coming off amphibolite, and then you hit that HPA thing. I thought, it's just a bit different, you know. So it's good to see that, and you know, kind of a good way to be pivoting away from a commodity that's not not faring well, but it just shows the robustness of the Salazar project, right?
Yeah, and I think it's, we're just really lucky we've got a bit of optionality there. We can, we've got those critical minerals, and we can, if the economics that we're going to run in the near term, if they show that we should be focusing more strongly on one particular thing because, low capex but high revenue, low opex, high revenue, that'll be a natural thing for us to focus on. So I think we're very lucky that we've got that ability. But fundamentally, it's because we need to just be aware of everything we've got in Salazar. And I think, it's only probably in the last 6 months or so that we've really started to interrogate that in detail.
Yeah. Yep, sounds good. Any last word to sell your soul to get people to buy your stock, Matt? Or you've already done that?
Yeah, I feel like I've given you a lot of the highlights, but I think we do think we are very cheap. With a 5 to 6 mil market cap at the moment, with a project that has got resources. Very large number on the rare earths, very large number on the titanium. That scandium potential. We didn't really even talk about the gallium, but there is high grade gallium throughout the deposit. I think the challenge is for us to educate investors about what this project could be. Ultimately, there's a lot of valuable minerals in the ground there, so we're trying to paint the journey of how we extract it and how we commercialise it. That's the focus for the next few months. I think, to me, there's fantastic upside on a number of fronts here. And so, I think if you're chasing a critical minerals project in a very good jurisdiction, I think this is a fantastic buy at the moment.
Yeah, look, as I said it many times already now, and I think the project has a lot of surprises, and that the gallium is a big play. I guess time will tell where you guys go with that. Scandium was a bit of a new thing to me. And obviously the titanium, that's been in the market for a while, and if you can monetize those three things, I think it's the perfect pivot in the scheme of things. Look, thank you for your time. I guess we'll follow your journey definitely, and we'll come back with some more updates. But Matt, welcome back, and we'll talk again.
Great, thank you, Noel.